Senga! What's up, everybody? How's everybody doing? Let me get some of this stuff out of the way here. You got Apple reporting at 4:30, I think they said. Yeah, unbelievable. And Western Ditch too, right? Yes. Oh, Western Ditch faded. They had earnings too. They sounded like a blowout, but I don't know. WDC, you probably got a lot of shorts in the SanDisk too, caught. He's calling it Sandick, this guy.
Now at $617, that's NDK off the highs. Going there, extremely strong reporting guidance.
Yeah, this is bananas. Bananas.
Micron shares spike on that as well. Right now.
Wait, Micron spiked even though Western Digital faded? That's how you know it's look at it. Micron spiked with Western Digital faded, and Micron held. Yeah, you got crazy moves out there, you know, just absolutely nuts. Absolutely nuts. All right, I think $138.4 billion. I have everything. I'll sift through market updates too quickly, just in case anything comes to mind. But I posted some of the more important stuff here to keep an eye on during earnings season. Stavro, how are you, Stavro? So silver ended up held on. Yeah, had a bounce, right? And gold too. And Bitcoin can't get out of its own way, huh?
SNDK, extend your country joint venture agreement 2034. That's sending up Delta Kilo.
I was going to wait till Apple just to get it out of the way, but that's 9 minutes away. Yeah, we'll revisit. When 4:30 comes around, we'll. All right, got this. Let me lower this guy. All right, let me. I'll run through some of the stuff, and then we'll take a peek at Apple in 8-9 minutes. Get an update there. All right, so obviously we're going through earnings season here. Interesting earnings season, especially in some of the more crowded areas of the market. AI, I mean, you could see the difference in sentiment in a lot of these mega cap AI names some better than others, depending on what day you look, but definitely a lot more cautious out there, right? And when you got crowded positioning and that crowded positioning starts to become cautious, that's not an ideal environment to hang around in. Today we saw Microsoft, but Microsoft was more, I think, from what I heard, cloud related, software related, what weighed on Microsoft. And Meta actually had a nice reaction, right? Well, look at all this mess. But, again, you look at an Oracle, credit swaps there are still kind of blowing out a bit, and acting can't catch a bid. So it's kind of what we're seeing in the market as a whole, I think. Hold on, let me lower this guy. Here are the important things. Those of you who STEAMROOM members know we've been talking about a lot of this stuff for probably the past week or two, more so over the last week, obviously. But I think here, kind of the dynamics of the market, and I like to pay more attention to them now as we're kind of in earnings season, because, when you're in earnings season, especially these 2 weeks, right, the heart of earnings season, the momentum is going to be dictated by the reaction to these big earnings. All right, and they're going to weigh on almost everything else, at least the initial reaction, right? And that's where the opportunities may lie. So you really don't want to overdo it for no reason and try to handicap earnings season, because a lot of it's out of our control. Okay, but a couple things that have caught my eye that I feel are important to keep an eye on here, especially over the next few weeks to see how it shakes out, comes down to a couple charts. And I came actually a little more organized this time. All right. So here's what's going on. I'll give you, it's almost, think of it as almost a tug of war in a sense, right? You have some risk out there, right? And again, that's not uncommon after you see a market rally as significantly as it has off the April lows without having a correction yet. Okay, so you're going to run into legitimate risk until you get that wash. There's no way around it. Okay, but keeping an eye on some of these tells can help you navigate if you're looking to be more tactical here. And I think that's kind of the best way to approach new risk right now, right? For me, and the way I look at it, again, I'm more conservative than a lot of you guys. There's no reason for me to really stick my neck out and get aggressive in putting on new risk yet, until we see some of these things loosen up a bit. Now, what's interesting in this market is you're getting a lot of dispersion, meaning that you can get rotating corrections from name to sector, where it kind of buys time. It doesn't happen all at once, all together. It may end in a little bit of a pullback, but maybe you avoid a correction by getting kind of this rotating correction from sector to sector, or rotating digestion. And that's kind of what we've been seeing, to tell you the truth. One of the big reasons why we've avoided a notable pullback. Okay, but here are some of the things that, again, I want to see kind of dissipate, even with everything I just said, even before I put on any overnight risk, because again, the risk reward gets skewed when you see some of these things. So here's one we've talked about many times on this webinar. Again, doesn't nail tops. Sometimes it does. But for me, it's a great measure of risk of when I want to loosen the reins and get aggressive and put on some long risk, and when I want to reel it in and become more tactical, right? We talked about, a lot of times you get this vol divergence, especially with VVIX. And we've been seeing that over the last few months, probably, I would say, what was that? December, maybe, right? Around there. Yeah, kind of. What's this? Yeah, December. Okay, we started to see divergence, and what usually happens, you get some vol divergence. It leads to a rinse, right? Nothing major, but a couple day rinse washes out kind of the majority of that divergence. And it's almost like a quick reset to loosen things up for a short amount of time, right? And that's where some of the better risk reward entries you will find is after these things resolve. So as you can see here, net, we've been building a divergence. And again, this can linger. If I remember correctly, I remember the 2000 high, there were several divergences that lingered for quite a while. And even after that, there have been many markets where you've seen some bearish divergence on some of these signals for multiple weeks before they get resolved. Okay. But for me, that doesn't take away the risk, right? Because you never know when that's going to show up, right? When that resolution is going to show up. So it's still, the signal still serves its purpose. Okay. So you can see here, net vol has been trading higher. This is VIX. Here's VVIX. You look at any of these vol products. Here's VVIX inverted, which I like to look at. Right. So here's a good example of it. VVIX inverted should look like the indexes. Right. That's more of a healthier move. You get a lot of participation. You get some nice tailwind, a nice risk on environment. Okay. As you see here, right? This rips, this yellow line, the equity market S&P 500 behind it rips as well. Okay. So what you start to see here is while the equity markets make a leg higher here, you see how this does not and is making lower lows, right? And then that led to this washout, right? So that's what I'm referring to as far as resolution is concerned. You get that washout, equities catch down to that signal, and then it opens up kind of the door for a decent move higher and a healthier move higher, even though it may be a shorter span of time, right? So in other words, when I'm talking about even on a more tactical time frame, I mean, just simply put, it rather than taking an entry up here and wondering when this thing resolves, right, down here is a much better entry, right, to state the obvious. So as you can see, before even this market pullback today, SPY went higher, right? And this did not, right? You see that divergence again. And then today, the equity market kind of caught down to VVIX, all right? But on the daily time frame, you still got a divergence here. Apple's out, so let's take a look at Apple here. Again, not that the initial reaction means anything, but Apple looks higher off the number.
Greater China revenue of 25.53 billion. America's revenue 58.53 billion. iPhone revenue 85.27 billion. Apple shares spiking here, $265.30.
All right, wonderful. So Apple looks like a positive reaction so far. We'll take a peek later on again. All right, so getting back to this, right? Again, I'm just going over it for some of you who may not be familiar with some of these signals we look at. All right, so net, it's something that I like to keep an eye on, especially when you're more tactical. It helps as far as entries are concerned. All right, so today's rinse helps. But what we want to start seeing from here, we want to start seeing divergence in the other direction. So in other words, we want to see the equity market weak or flat, and there's filling in the vol complex, right? That would be some early signs that this is kind of, there's a larger resolution on larger time frames. Okay, so that's what's kind of keeping an eye out for, aside from even just the simple warning signals on a tactical basis. Here's one you guys know, I talk about it a lot, I love to look at, especially the type of market we're in right now. It's 1 month implied correlation. And, when you get down in this area, right, we've talked about this on this webinar several times, going back to here, again, you don't instantly get a pullback that minute, that day. But what you'll realize is the market has trouble finding follow through on the upside. And not only that, the upside is ugly, right? Because it's low correlation. So think of it again. The way I throw it out there so you guys get a better idea what you're dealing with here. You play 4 stocks, the indexes are up, and 2 of the 4 stocks are lower for no reason whatsoever, right? You like a certain sector, that sector as a whole is up, but the stock you own is down for no reason whatsoever, right? No excuses. The excuse is just that type of environment, that type of take, right? So that's one. I think that's the most important takeaway, right? From this signal. The other takeaway is, especially in more of this recent market over the last, I don't know, I would say maybe 5 years or plus or so, around these areas, it's also been a good timing mechanism to kind of get out of the way and look for a rinse, right? And what happens is you get this sell-off, right? Sometimes just last a day or two. Correlation jumps, right? You see like kind of these minor jumps. Volatility jumps with it. And then they can just go back to rolling over, all right? But what that allows us to do is kind of sidestep where the risk-reward entry may be poor. And then once you get kind of that resolution, and it lines up well with the vol signals we just looked at, you got a little window of bullish momentum where the participation's even better, right? And just on a larger time frame, if you guys remember, those of you who were around April, okay, I think the best part about the April lows and that April correction was correlation and vol had major spikes. They overshot to the upside. And when that starts to roll over, that's what I refer to as a sweet spot, where you can literally throw a dart at almost anything and you're likely going to make money, right? The total opposite of what we're dealing with right now. So here, you're dealing with a market where even if you're right on as far as the market direction is concerned, the stock you pick may not participate, right? And back in April, you could be wrong and still make money on the long side. All right, so that's kind of the difference between the two. Now, again, we talk about lingering, and I think that's the most frustrating part. This can linger before you get kind of a notable spike in correlation, which also will mean a notable spike in volatility. They kind of go hand in hand. Okay, you can get these little pop and fades, kind of like what we've been seeing for a while. And I got news for you. That, for me, that's what it kind of looks like in this market, is not going away anytime soon unless there's some exogenous catalyst, right? Something the market is not pricing in yet. All right. Some people think it may be Iran. Some people throw out there kind of these tariffs with the Supreme Court, whatever it may be. But a lot of times when you're in this type of environment, there's that catalyst that gets these things to finally trigger. All right. These normal just rinses. Again, that's kind of what we saw today. There was really no excuse. What was the excuse for selling? Right. They usually sell VIX and buy the dip in equities. All right. And that continues to go on. And another thing I like to look at, by the way, that was a 4-hour. Here's the daily, so you can see it kind of just cleaner when we get down here in this neck of the woods. So this is the move today, the pop in correlation on a daily. So what this tells me, simply put, is that even if we rally tomorrow, okay, even if the equity market decides to rip off Apple and SanDisk, okay, we're going to be right back to where we started yesterday, if not worse. That risk doesn't go away. Right? So you can see how you can get in trouble. All of a sudden, you see good news, you see the market acting better. Now you get sloppy and start chasing longs. And then next week, you're running into the same rinse we saw today. All right? So that's kind of the issue, is that it's almost like stepping on landmines. You can't get comfortable. Right? That's the main issue. Credit, which we talk about a lot, yeah, depending on what you look at and what index you overlay it with, it may look more bullish or more bearish. There really isn't for me, there's nothing major here. A lot of the credit spreads you look at, like high quality spreads, are at record tights, meaning they're at the most bullish spreads they've been in that we've seen. Okay. And that's what you can see on this chart here. Okay. So I inverted AAA, triple B credit spreads. Okay. So this is at new lows, basically. So it's a bullish signal, right? It's really difficult to get a market to sell when you have these type of things screaming risk on, right? Or there's no real risk out there. At least the credit market's not pricing in any risk yet. Now, some may look at this in a contrarian way and say, well, we're at record tights. That kind of a mean reversion look, right? You could say, oh, maybe things are going to start to swing a little bit in the other direction. Yeah, it's true, but we're not seeing that yet, right? So you can make that prediction, but until you see it, you're not going to get risk assets to sell, right? Equities to sell in a meaningful way. Now, again, you get some sort of catalyst and it can put things on fast forward. But credit looks fine here. There's no real, again, I like to look at this intraday anyway, because I find that I have more success when some of these credit signals are confirming strength than when they don't, right? Because a lot of times you see these green to red fades when they're not. But again, not making too big of a deal out of it. Big picture wise, it's not screaming any sort of risk here. Okay. Where am I? Oh, hold on. Okay. So think of it like this, right? You got correlation, which is a risk, right? In the bearish column. This now is on the complete opposite side. I talk about that tug of war, right? So where things look like you might get a sell-off, you got financial conditions that are extremely loose right now. We've talked about this in the past, right? When financial conditions are this loose, that means you got easy economic conditions. You have every excuse out there for, on any dip, players to put money to work, especially in cyclicals. Right? So that's been our takeaway. If you remember, even if AI struggles a bit and tech struggles a bit, which it has, okay, because financial conditions are still extremely accommodative, they're likely going to move that money into economically sensitive stuff, cyclicals, right? And that's what we've been seeing. So again, how do you get a correction when you got financial conditions this loose and you got tax cuts coming, Trump putting in his own Fed chairman, screaming for rate cuts. They already cut a quarter, Powell, right? There's no talk of any tightening out there. So you still got, that liquidity financial condition backdrop still extremely favorable. Okay. Maybe not participating in the upside for equities anymore, right? Because financial conditions aren't loosening any further. Liquidity is not expanding further, right? They kind of topped out, if you want to use market terms in a sense, but they're still sitting at extremely favorable levels. So I like to tie this, as many of you know, with what I just mentioned. Okay, so here's again the concern. Let me try to put it together so it makes sense for you guys. The risk right now, right? What may be preventing us from getting long, or even wanted to hold stocks, let's say, because there may be a pullback. You have correlation at levels where you usually see a pullback. Okay, you have CTA funds and vol control funds, which are aggressively long and have been long, right? And if you do get a pop in correlation in VIX, you possibly get these systematic funds to do the opposite and start unloading some of this supply, right? So I like to look at this indicator as a measure of, if you do get a pop in VIX, what is the likelihood that these systematic funds chase and buy VIX and sell equities, the S&P 500, or do they sell into that VIX pop, that vol pop? You understand? Kind of like we've been seeing. And what this has been telling us for forever now, I mean, literally since the April lows, but what this has been telling us is that any pop in VIX, these vol control funds, for whatever reason, even though exposure-wise they're pretty maxed out, they are not aggressively chasing VIX and selling equities, right? So what this is showing is the potential selling on a 2% sell-off, 2%. Okay, and this is telling you not much. Now, from my experience, what I usually see is this thing at least north of 6, a lot of times 8, 10. When they're caught off sides, you get a pop in VIX for whatever reason, and these systematic funds just unload equity supply and chase VIX, and you get that waterfall of selling. Okay, this is not there yet. This is not there yet. So when I apply this to what we just looked at with correlation and some of that stuff showing risk, the takeaway from that is the probability that these VIX pops and correlation pops are likely going to be sold into, not chased, based off that indicator we just looked at. Okay, if that indicator we just looked at was at 8, that would be definitely an extremely cautious sign, right? Because what that tells us is these little pops in correlation and VIX, they will chase those pops. They will chase VIX into that strength. Okay, so it's not there yet. For whatever reason, it's not there yet. Here's, again, put this with financial conditions in the bullish basket. Many of you know this is MOVE, kind of the vol of the credit markets. Really important for just liquidity, especially in the bond market. I mean, look at this. All right, this has been straight bleed. You get these minor little 2-day rallies, and then boop, new lows. No concern with everything we're hearing. We're world war on the brink, Iran, AI bubbles, this, that, the other thing, dollar crashing, right? All these things flying all over the place, and MOVE is making new lows every other day. Okay? To get a sell-off, you're likely going to see this act a lot different. Okay, just to give an example, this was into the April correction, spies in the background, if you can make it out, right? And here's the move and move, right? So you even started before even equity sold off. It made not only made a low, but started to even push higher, and then equities kind of rolled over. Yeah, a lot of these things we continue to look at were screaming warning early last year. screaming warning for a good month. And this is again, aside from correlation, which for what I mentioned is kind of more of my concern, especially on a more tactical basis, because it's kind of dodging landmines, and even in a bullish tape, it's not that bullish. This is the other issue here. Okay, you got risk appetite starting to swell, and a lot of that risk appetite you're starting to see from retail. Okay, now it's not the professional crowd again, right? The professional crowd, from the things we look at, has been still pretty cautious. Hedge funds really aren't doing a whole lot. Again, they were up to their eyeballs long in a lot of the mega cap names that they kind of have broken up. They were short a lot of these more speculative names. They got run over there. So that group is still licking their wounds in a sense. They really haven't took the bait and got aggressively long equity from what we look at. And retail has been a lot more bullish at times, but mostly in the options market, if you remember us talking about, right? Where call activity would get really into a frenzy, and then the market would sell off for a week and wipe out all those weekly call buyers. Okay? What's different this go around, it's not the options activity that's showing this speculative fever. It's ETFs, right? Now, to me, I'm trying to think back, because again, that hasn't been a common thing in recent years. It's been more common back in the day. Now, because options, I think, are more popular. That's one of the reasons why. But a lot of times, we've talked about this in the past, when you get that huge spike in inflows in the ETFs from retail investors, right? Sometimes it can be a bullish thing, right? That they're finally putting money to work in the market, because those flows really haven't been that bullish. But what happens is, on a more shorter term, intermediate term time frame, the indexes find trouble going higher off of that. So, I mean, you get some digestion, right? You get a little volatility, some consolidation. So it doesn't have to be extremely bearish like some of the perma bears make it out to be. Sometimes it is. Sometimes it marks major tops, but not always. Okay. But as you can see, this is Citadel's retail risk on, risk off gauge, and it's floored right now. Right? I mean, any higher you break it. So, this and fund flows, that's kind of positioning wise. I think that's the problem out there. That gets me a little bit uneasy. But there are several ways to solve that, right? And I think one of the ways is kind of what we're seeing right now. You look, I mean, this market really isn't going anywhere, right? If you look at the S&P 500 and even the NASDAQ, it's really not doing a whole lot, right? It's areas where a lot of this money hasn't found a home yet, right? Like kind of the small caps, which we talked about. That's been outperforming the equal weight S&P 500. All right. So that's, in a nutshell, that's kind of where we're at. Again, it's not clear cut and dry, right? It's not clear cut and dry bearish where you go into your bunker and you wait for a sell-off. Again, perfect examples early last year. That was go in your bunker, spit on any upside. If the market continues higher, whatever, okay, because there's too much risk and you got to wait for a correction. That's kind of what the signals were telling us early last year. Okay. As you see, that's not the case right now. That's not the case. But you got a little bit on both sides, right? You see, you got some cautionary signals on the bullish side, some bullish signals and some cautionary signals on the bearish side. Okay. So that's where we're at. For me, game plan wise, it really hasn't changed anything in a major way. The only thing it's changed is over the last few weeks, as we've gone into earnings season, I'm not really looking to take any size positions, right? Now, again, it kind of lines up well because of earnings, right? Because of the things we looked at, like correlation, we get a rinse, a healthier rinse. I'd be a lot more eager to look for opportunities. But even the other thing too is the stuff I want to buy, right? The stuff that we've been bullish on has all ripped pretty hard, right? So for me, like the small caps are what I've been most bullish on. Okay, what am I doing here? Like, what can I do? Does it make sense with the stuff we just looked at, like correlation and retail being a little too high, to buy more Russell up here off a niner, or wait for a dip? Right? The commodity names, I mean, as most of you know, especially those of you who have been playing metals and minerals and all that shit, they've gone bananas. They've gone bananas. Even oil has been acting better, right? I mean, by the way, I know I'm going to regret it, but I just had to. I sold the one copper name that I actually got my hands on, that ERO. I left 1,000 shares just for good measure, just in case it goes to 100. I don't get completely nauseous. But like, look at these names, right? What are you doing with these names right now? You understand? So it's not just, based off signal why I kind of pulled in the reins here the last couple of weeks just to see how things shake out. Is a lot of the stuff, most of the stuff that I'm interested in owning for this year, at least the most of this year, has already run a lot. The only thing that hasn't is kind of the home builders, and that's where I'm kind of keeping an eye on to actually add some risk, right? But everything else has rallied aggressively. So that's where I'm at. That's where I'm at. And like, for example, here was another group, the financials, right? And they reported, and look, you got a nice little pullback there, right? So sometimes it makes sense to be patient as far as looking for new entries and putting on new risk, right? Not everything is SanDisk. Not everything is gold and silver, and even that stuff, the majority of people who are making big money and are likely going to hang on to the majority of that money in these things own it from a lot lower levels. You're taking on, to state the obvious, you're taking on a lot of risk buying something that's already ripped, let alone parabolic. Can it go higher? Of course it can continue going higher. But when that pullback comes, you probably get spit out chasing parabolia. So again, like you had the start of earnings season, the financials are first, right? They reported, you got some selling, you got a little digestion. Now you can probably look, right? We talked about it on the webinar Sunday. Financials are more than likely going to be one of the first groups we start to see real post earnings buying. And if you see, some action you like in any of these financials, or you like the spot even without action, hell, we've seen a ton of flow already in these things, right? This is where we want to at least start looking. These are where we want to at least start looking. And that's what kind of, the other thing that makes me nervous is, again, the stuff that's run a lot. If they report, you may get some sell the news because they front ran earnings, right? They ripped it into earnings. Okay. So again, no major changes to kind of the playbook here. It's been the same for a while. And again, I'm just hoping we get more opportunity in individual names throughout this year as kind of these cyclicals do their thing. Yeah, I mean, Citigroup, out of all the banks, somebody mentioned Citigroup, out of all the banks, Citigroup has seen the most aggressive call buying. I don't know, again, I don't know why. Somebody told me that they're less diversified, and if the financials are doing well for certain reasons, that's where you get a bigger bang for your buck. Again, that's what somebody told me. But I can tell you, sweeper wise, they've been buying every dip in Citigroup for a while now, every dip. But again, all the major banks, catch flow. JP Morgan, Morgan Stanley, JP Morgan, you had a nice pullback because of, I think, a Trump feud. I'm not even sure. But again, where is it? Back to where it was a month ago? Little downside 9 a year. The only thing they could possibly digest for a little bit. They're not SanDisk, not yet anyway. Maybe they end up being SanDisk at some point later this year, but they're not right now. So we just want to be prudent as much as possible where we want to own these things. And the other thing in the back of my head tells me, like, we're likely going to see a correction at some point this year. You got to believe. Like, not just a little pullback, a correction. I don't think we're there yet without something going boom. And that certainly, there's enough balls in the air where there could be a problem. But you're going to need, because again, like I give the example COVID. The last time I remember a similar backdrop where financial conditions were pretty loose, liquidity was decent, not everybody was all in long yet. You had parts of the market that were on their own. Was right before COVID, and the market kind of ignored COVID while it was in Asia for a while, to people's surprise. Like, it was frustrating bears. I remember that. But then, when shit hit the fan here, I mean, that's not, you're not sidestepping that. You're not sidestepping a global economic shutdown like we've never seen before, right? Where everybody's locked in their house. And that's, it reminds me of that kind of backdrop. Now, again, I'm not saying COVID or something like COVID is going to happen. I'm making the point that that's what it usually takes. That's what it usually takes. Now fast forward three months from now, things can look a lot different than they look. All right. And we could be singing a different tune, but right now it's not there. I tell you what's frustrating to me is not even that, because right now I wouldn't even mind a correction, to tell you the truth, because that would be like the next best entry on the cyclical side. I really do think so. But what I think could be more frustrating is this type of tape we're dealing with right now lingering a lot longer than we would like. Because it gets tricky in this tape. It's not that easy. Now, I feel, and I could be wrong, I feel if we stick mostly with the cyclical side and we try to buy them off pullbacks, right? Or new entries, new names, catching new action at good spots, I think we'll be okay. You understand? Like, I think that's the way to kind of avoid the stickiness of this tape. But it takes a lot of patience. It takes a lot of patience. Oh, right now is a good example, right? Like, really, the financials from all the things that have run are the only things kind of setting up again so far. Right? So again, we'll see. You can't predict this stuff looking out anyway. You take it week by week, look at where all this shit sits, and plan accordingly. Plan accordingly. So again, and we got one more week. Next week, we should start to see the sweeper activity start. The key word there is start to clear up late next week. It's possible, could go into the following week. But you got big earnings next week too. So we're in the hands of earnings gods now predominantly, no matter what. Right? They're going to dictate the initial momentum, the reaction off these earnings. Right? You got Amazon still, you got Google still. You still got some big names. But I think we need to start to keep an eye on is some of these more cyclical areas that already reported that start to see post earnings buying. Okay. Again, they may not be set up, meaning they may not be off pullbacks, but that's where the cleaner flow is going to come. Example, today we I put the top bet list out in the steam room, and there were two sweeps. What did I do with them? I thought I posted. Oh, here they are. Okay. Both repeat bets, both in that cyclical camp. GM has been a huge winner. UPS has started acting better. I think many of you have played UPS on a longer term tuck away type name. Okay. So these names, because they already reported, we're going to start to see post earnings activity start to show up in these names. I think the problem is going to be whether, like, here's GM. Like, look, if you're looking to buy or GM repeat activity, look where you're buying it. This thing's been a beast. All right. UPS, which was, has been a series laggard, also had a nice move off the lows. Kind of a little choppy here. Just reported, right? A couple days ago. But you got, like we talked about, right, on the verge maybe of a huge breakout. The better name in that group has been FedEx. Look at FedEx. So that's why that's the problem with these cyclical leaders. You want to go to the laggard because they haven't run as much, but usually all the money piles into the leader. The laggard plays catch up, and that takes time. Like, look at FedEx. Look at this. It looks great. Looks great. No, and that's the other problem with cyclicals. They come after the leaders. Hopefully we're going to start to see now it spill over into mid cap and small cap. Right? We've seen a little of it. Hopefully we start to see more of it. As and if these cyclicals do well this year. Okay? Because again, this group still has a lot going for it, guys. A lot going for it. The concern, I think, inflation, if inflation ever caught fire again, I think potentially it may be a concern longer term on these cyclicals. I think it might be bullish on a shorter term basis. Okay. But everything else, you got financial conditions extremely loose. You're going to have a more accommodative Fed likely to cut rates next year, no matter what anybody says. It may not need to cut rates, but like Rick Reeder, who is kind of not a Trump guy, he's already talking about rates need to be cut, right? So you got that going for you. You got the dollar shit in the bed, right? So a lot of these cyclicals benefit from that. Small caps, all these names, So you still got an extremely bullish backdrop for this side of the market. Extremely bullish. Big picture wise. So again, it's just a matter of where we want to put on new risk. We want to try to kind of buy off pullback and digestion. That's the goal. All right. So what else? Any other names you guys are looking at? The other names, guys, it's not that I don't like them, right? Because a lot of these names that you guys like to play, they've all had legit corrections. Now, my gut doesn't, I don't think AI unravels in a bad way. I think that's the risk, right? But I don't see that right now. In other words, I don't see a 2000 scenario here. And by the way, a 2000 scenario, as we spoke about, I think is bullish for cyclicals. Right. So that's not a risk for them. But I'm talking about like kind of the other side of the market right now. I think it's tougher. It's just tougher. Right? Like, you get Meta at a discount. They report decent numbers. You can make money there, but an Oracle still can't catch a bid. A Microsoft not acting well. I look at them, me personally, I think they can be traded off sell-offs. But, you got to pick and choose names you like. And that might go, and it's already for some of the other kind of long in the tooth AI names that have been rallying for 2 years now, that are great companies, great numbers. They just, they need to digest. So I just think it's a tougher trade there, but at least you got a pullback, right? At least you got a correction in these names. Crypto, yeah, I mean that's out of my league. Again, Bitcoin, I can only tell you, like when I think Bitcoin, I think liquidity, right? We talked about liquidity in October. Remember, it topped and rolled over, and that was likely a problem for speculative names and crypto, right? It was easy to come to that conclusion in October. Now, liquidity is not unwinding further. It's kind of stagnant here now, right? It's kind of hanging around any measure of liquidity indicator you're looking at. Even has seen a bump global liquidity off what China has done recently. So as far as strictly based off liquidity, Bitcoin should find a range here. And, aside from today, that's what it's been doing. Okay. Now, again, as you know, I'm no Bitcoin bro. I have no clue. These imaginary coins don't make any sense to me. You guys know that. Okay. But strictly from a liquidity perspective, for the form of liquidity, measure of liquidity I look at, this should kind of, what the hell did I do here? This should find a range to hang out in. So again, it would surprise me a little bit if this thing just went south here. It would, but what the hell I know? I don't know how this thing's at 90,000 to begin with. You know what I mean? Intel, you guys know my feel on Intel. I think Intel's where you want to be on the cyclical tech side. Again, the problem becomes where do you buy it? Okay, if you're in Intel, listen, it's an easy answer for me. If you're in Intel from lower levels, which some of you are when it started catching action, and you're holding it, I agree 100%. That's what you should be doing, in my opinion. Okay, but the problem becomes like, where are you buying Intel new risk wise? Like, you know what I mean? This thing has come from $20. It's at $50. You buy it off pullbacks. That would make sense, right? So that's kind of a lot of these cyclical names that have already moved. Like, in my opinion, Intel has hatched. Like, this is not a fugazi move. The stock has doubled here. All right. I think playing this thing, you got to look to play it off pullbacks, and that's the only thing you can really do. buying it on a longer term time horizon to hold, like for me, you guys know I don't find that too appealing. That doesn't mean it can't end up being a good move. I just, it's doubled. You guys know what I'm getting at. But I think Intel fits the bill perfectly, I think, for where we want to be, right? Yeah, and they buy Pete, they buy every pull, every dip. This thing, let me tell you something. From Intel back here, and many of you in the steam room know, okay, Intel here, the flow was awful. It was so bad that, as bad as the stock was, Intel, when it caught aggressive sweeper activity, I would trade it because it never would see aggressive buying. It never would because it was a shit stock. It saw mostly put action. You look at the action now in Intel, there's call sweeper activity every day. Every day. The flow is active every day. Like it's a completely different stock. I think one important reason why is because cyclicals are in vogue, they're in favor, and it's made some changes. You get Trump touting it, right? Posting a Intel chart on social media behind them. So it's Trump's baby here. Yeah. So again, I like Intel. It's just a matter of where where you buy, right? Or pullbacks. I think without a doubt, if you like it, without a doubt. Anybody else looking at or has found any interesting names that has caught their eye, cyclical wise, or anything they're keeping an eye on through earnings and stuff like that? Let me think. I'm trying to think of names you guys like. Oh, what has been active? That underbelly data center group you guys like. So there's been a really active flow in these guys. APLD, which had a great quarter. Irene, Wolf has been really active. So these names, even as some of these underbelly names kind of went out of favor, these names, like look at Wolf, they really, just been consolidating here. So I've day traded Wolf a couple of times off the action. I can't get myself to buy it up here when I bought it down here. As you guys know, I still own Wolf, by the way. I still have stock that I left behind, runner. But it's been active. It's been really active. This guy's been active. Now, all these names are getting ready to report. Irene reports next week. So they're kind of front running what should be good earnings. Like Irene, I'm sure they're excited about that quarter, right? When's the last time? This is after October. But if I remember correctly, I think the stock was up off that number too. Let me see. Yep. No. Oh, yeah. Or maybe not. I don't know. But this is post-October. So this is when they were out of favor, right? This is what we were pooping our bloomers about. But Irene's got a sexy story. KMX, that is a cyclical. This hasn't been the easiest stock, especially of recent, this KMX, but it's in that camp. Why is this chart? What happened to this chart? What happened to my chart? Where's the rest of it? What the hell? Oh, there we go. So, this is what you're looking at, right? Like, look at this. This is the menagerie you're dealing with here. Think UPS truck. I would put it in the same camp. but I think it should do well. I think it should do well. Like this, I told you I didn't buy this yet. Remember, I told you guys I was going to buy it. I got so sidetracked. Like this, I think is a sleeper in that camp too. But they, these things are tough. The KMX is definitely better than the Hertz, obviously. Gap, yeah, very possible, very possible. Again, it wouldn't shock me. You get breakout here, like we've been seeing. The problem becomes with these names struck, as you know, because of all this, you get sellers into rallies. And it gets frustrating because you get like 2 steps forward, 1 step back type shit. All right. That like once you clear on newer names, there's just not much selling. Like that's kind of the appeal. This is an underbelly name. But this is why, one of the few names I ended up buying was this ERO because, there's nothing here, right? This is what I hope we see more of, guys. Like, this is what I'm hoping we see more of. Oh. Okay, so here you got an underbelly copper play, right? Freeport's getting lit up with sweepers. Copper looks great. Metals are flying. We love cyclicals, economically sensitive stuff. Like, copper was an alley-oop. And, you got a name like this where, like, look at this. Back to the highs, a little consolidation, and teom. But my point is, like, again, the sector got hot. But look, even there's just no selling. Who's selling it? Nobody owns it. You know what I mean? Right, the overhead supply, exactly. So that's kind of the turnoff for me on names like this. But if you're patient, you can hit home runs here on these things when they go from out of favor to in favor. So, but you're in the right camp here. All I can tell you is this, Struck, and honestly, I'm not even trying to sound modest, but I'm telling you the truth. The only thing you should respect my opinion on is the flow and whether the group it fits the bill of what we're looking at, right? Because you'll probably pick more winners than I did. Like for example, when you pull the trigger on that tranny, like it's something I didn't buy, but trannies are in favor. It caught legit sweeper activity. That's it. You like it? You shouldn't be asking anybody any other questions. Honestly, anybody, not just me. But I'm telling you the truth. I'm saying, listen, I'm not gassing you up, Struck. You're a jabroni like anybody else. I'm just saying, if you like something and it fits the bill, don't ask anybody's opinion. The only thing, the flow, it's in the right group. That's it. Case closed. I'm not gassing you up, so take it easy. Which one? Carvana. Yeah, I don't know. I don't know about this. It caught big action, as many of you know. I'm sure it was posted all over social media as well. It's a heavily shorted name, and it's got earnings. Some short blog came out with a piece yesterday. I think that's what the selling was. But I don't know. I'm not going to tell you anything about Carvana that you don't know already. The flow I would take with a grain of salt because it's earnings. Guys, here's a perfect example. Okay. And listen, you could have traded it and made money. Okay. So I'm not talking about trades. I'm talking about predicting earnings. Microsoft, they absolutely tattooed April calls a week ago. Okay. Now, listen, they may end up cashing a ticket come April. It wouldn't shock me one bit if they're still in it. I'm sure they are. Okay? So keep that in mind. But that April buying was really aggressive, ridiculous size, and set off a little momentum. Okay? But did it predict the outcome of earnings? Nobody can predict the outcome of earnings. These days, nobody. I don't care if you got inside information. If you whispered in my ear inside information that you knew a company was going to report so-and-so, I still wouldn't know what to do with it. You know what I mean? So that's the problem with earnings flow. And the reason I bring that up is Carvana caught huge Fed call buying. Okay? What that means for earnings, I have no idea. You know, again, it's got a humongous short position. Maybe it's a short hedge for earnings. Maybe they're replacing equity for earnings. I don't know. But that's kind of the point, you know. Talk to me after earnings and you see some aggressive buying. You know, at least I could tell you it's clean buying. But like this, you know, Carvana is kind of off my watch list. Been off it for a while now. Look at this thing. You know, another name that kind of is seeing similar action to Carvana is this guy, Lemonade. Heavily shorted stock, kind of cult following behind it, has been seeing an uptick in sweeper activity, and you got a lot of shorties to get squeezed in this name. A lot of shorties. Now, earnings, they report next month, when though? 19th. 19th. But every dip they buy in this thing, Lemonade. Yeah, impossible, AB. Impossible. There's so many. Now they front run good earnings, right? You see a stock rip and then sell on the news. Earnings can be good. The guidance misses whispers, right? Microsoft, the earnings were great. AI was great, but the software part of their business, people are concerned about because software is getting torn apart. How are you going to handicap that? Come on. You know what I mean? You can't. You got to be real in this game, man. You can't handicap that. If you play earnings, you're doing it for entertainment purposes only. Take a little bit of money, roll the dice, stop pretending like you know what the hell you're doing or talking about, and you have fun and you're playing lottos. That's earnings season. That's earnings season. It's a crapshoot, complete crapshoot. Okay, like again, post earnings. When you start to see post earnings buying, it's the complete opposite. Like for example, this Microsoft, and you want to give it a little bit of time, right? Because again, it's an active name, everybody's talking about it. But let's say 2 weeks out, or not even next week, you start to see the buying show up that we saw in those April calls. You buy it. Now you have an opportunity in it, right? Earnings behind it, better entry, sold off of earnings, and that aggressive buyer is back. To me, that's how you got to look at earnings. Path, I don't like this name. Let me tell you something. The name makes sense. Okay? It's always made sense, Path. You got an AI name. Nobody really, undiscovered in a sense. It's not a bad company. Like you got stocks with zero revenue out there. They do 350 million a quarter. Like this is a legit company. But here's the problem. You got every mope out there, whether it's a blog, a newsletter, everybody you don't want to be touting the stock is pumping the stock. Okay? And while that's going on, the CEO is selling. Look at this every day. So you got every pump and dump blog pumping the stock and the CEO selling into every pump. Get the hell out of here. Is that crazy? I see this guy, honestly, a couple times every week show up, dumping stock. And then you come in the next morning, today, there was another pump on it today. Banyan Hill or some shit. So I don't like this name for that reason. RR, for a robot lotto ticket, that's the extent of it. Robot lotto ticket. As a matter of fact, here, I got another one for you. Yeah, I had another one if I could remember the symbol. No, not iRobot. What the hell is that symbol? What's that little guy that those of you in the steam room that saw some spec action recently? Little robot stock. It's like $1. Oh man, what the heck is the symbol? Something R, 4 letters, Rob, something like that. I could dig it up on no, I can't dig it up on there. What the hell's the name of that? Anyhow, not iRobot, but similar to that. It's $1. Really cheap spec action. Oh, iRobot might be bankrupt. I forgot the name. If you were in the steam room recently, no, similar to MBot. I think it's with I was ready to type Arab. It's something like that. Arab, something like that. No, I can't think of it. It'll come to me eventually. But that's what I think. RR and that stock, because robotics, you could see it heating up, right? Kind of having one of these frenzies. Here's another name, SERV, that catches flow from time to time. But I would buy them off weakness. Be careful chasing. As you can see, these things have been really choppy. You know what I'm talking about, Struck, though, right? I'm trying to get robot. No, that's not. Eventually it'll come to me. But anyhow, so these are these robot names. Oh, another name that's done well is the whole group did. ONDS caught some nice flow. Ran into an upside niner here and has sold off. ARBE. Who was that? Thank you, Brantling, or whoever that was. Thank you. Oh man, you saved us brain knots. ARBE. See, I was saying Arab. ARBE. This is the one. So, this thing in this neck of the woods down here, as a tuckaway robotic lotto, not bad. But again, that's what I would treat it as. It's not a go-to name right now. It's definitely not a go-to name. Because they haven't really found strong momentum. These speculative names kind of been hit or miss. But I was saying ONDS, if this thing, again, I've been trading it tactically, mostly intraday. I held it once. I sold it the following morning. I probably should have held it and I would have caught this whole move. But, has had nice momentum and the buying shows up rather aggressively when they show up. Maybe they'll revisit at some point here. Another name I played that I took a scratch on. I didn't even make money and it ripped right after. So I traded RCAT in this vicinity and ended up getting out of it. It popped and came back to my entry. I sold it and then had this rip. And this is kind of the stud. Katos. These things just got a little crazy. But you want to see this. Yeah, instead of going parabolic, this is what you want to see. You know, like even sometimes these things they base for a while, and then they set up a decent trade, right? If you remember in October, that's kind of what we were hoping for, right? Not all of them exploding the way they did because it becomes a frenzy, and it's not likely to happen. You get individual names. Now it becomes a little more difficult because you're hoping for flow in that name. Because not all these names go nuts, but you find one you like, you catch some flow at a nice spot, right? Like even some of you, I think Irene, you like, right? So even if this doesn't bust out here, and that's kind of where it looks great, right? But you had a nice trade in this window here already, right? And I think the healthier thing would be that it sits in this for a bit longer. I think the best thing for Irene is it shakes all these guys out again and then breaks out later in the year. Kind of what like SMCI did back in the day. See? And then boom. Because this is a huge move. You know what I mean? And I like Irene. I like Irene a lot. This move is huge, huge. So there's got to be some digestion here. I'm not saying anything's wrong with Arabs. Have a symbol. That's what I was thinking of. What else you got here? This is a good stock industrial name. Amphenol, right? Yep. This is just a great company. It's just up a lot, Look at it. Up a lot. Like I remember we saw flow in this breakout. They like a lot of these more the industrial, the cyclical names, they all do something like this, right? You get this right back to highs, you get this little handle, and then boop, good night. Look at that. You had another little consolidation here. Oh, this was longer. And another, look at this move. Oh my God. So this is the problem, Like this is a great stock. It's a great company. Like what do? They probably do billions. $6 billion for the quarter. This thing's an animal. This thing is an animal, Amphenol. It's just up a lot. You want to see another one? Cummins engine. You know this stock. Look at this beast. Look at this. Talk about cyclical. Look at this. What are they expecting? $8 billion for the quarter. $5 a share in earnings for the quarter. And cyclicals are just breaking out. Look at this stuff. So if you do get pullbacks along the way, these are the type of names you want to look at. The problem is you don't get pullback. Look at this monster breakout, right? Struck. This is what we were talking about, right? No overhead. This thing gets going. Who's selling this stock? And I got news for you. Institutions, when they want to put on cyclical exposure in equities, these are the names they come to. This is a blue chip name. Cat. That's when I think of Cummins, I think of Cat. Same shit. Now, Cat, you had the benefit of it being somewhat of an AI play on top of it. So you had the AI run, and now you're getting the cyclical benefit too. But loose economic conditions, I'm sure the lower dollar helps. Lower rates, everything benefits these names. The backdrop, this is what you want to own. And what's his name? Paulson had a great note out today. Like the job market being a little shaky, right? Like it's not falling apart, it's not unraveling, but it's been sluggish. That might be the best thing for these cyclicals. You know what I mean? Because the White House, Trump, he's determined. He don't want jobs falling apart. So any little crack there, he's going to have his Fed guy taking an axe. Let alone any other stimulus he may come up with. So the job market doing what it's doing is actually bullish for equities, for cyclicals. But yeah, these names, guys, they're just up a lot. You know what I mean? Like, there's nothing else I could tell you. Like, they're just up a lot. Amphenol, Cat, Cummins, these are great stocks. Here's a name that's been struggling that I would put in, like when I talk about Cummins, Caterpillar, this is a name I put right in there. And it's had issues recently. URI, United Rentals. Had earnings, maybe you're getting an opportunity here. There was some flow off the correction in April. I remember a couple of people in the steam room played it. So maybe some buying shows up here. And instead of buying a cat that's parabolic right now, you got URA at a ridiculous entry. Yeah, I mean, gold, a worry for what though? Like what for what? You know what I mean? Like, listen, usually gold moving like it has, usually the only way gold moves the way it has is you got some apocalyptic event going on out there. Right? But is that what's going on, or is this just a new market? I mean, this is not supposed to happen. Okay? Like, this is what happens. If Bitcoin can go to 100,000, why? Like, the moving gold, first of all, okay, don't get me wrong. There's been some velocity here, but we were looking at this on the webinar last time, right? Look at this. Okay. Look at this. Gold went from, over these years here, gold went from, 200 to 2,000, 10 times. 10 times over 8 years. What are we talking about here? 5 times. Now, again, gold is known to do this. Look at this in the 70s. Is it world war? I mean, we're going to have world war? Is it something like when? Look how gold broke out. Let's say when did it break out here? Let's say highs, right? So it broke out after a problem, after 2008. I don't know. Again, I just don't know. It's gold. Like, it's not equities. You know what I mean? Gold has been like, you had bulls complaining about it for ages. Why Bitcoin went parabolic and gold didn't move. Now gold is going nuts and Bitcoin's not moving. Yeah, well, you got that stuff out there. You got debt issues, you got the dollar. Like, there are reasons to own gold. But worrisome for what? Equities? I don't know about that. You know what I mean? I don't know about that. Yeah, again, you've seen other metals move with it. Silver, look at silver. Look at copper. Look at palladium. Look at platinum. Look at these things. You know? It's just, these are the times, man. These are the times. You know, now you got the dollar shitting its pants. And you know, even the dollar, like people are you go on Twitter and you think we're in the apocalypse. Our dollar's worthless, blah blah blah, but we've been lower than this. You know? We've been lower than this. And by the way, that's another facade out there, right? Equities can trade higher, metals can trade higher. The dollar softens, it's kind of a mirage. Right? Equity prices higher, but they're worth less in dollar terms. So again, you know, you have people trying to make a bigger story out of it than it is. But we're seeing it, you know, we see it all over the place. Right? Look at the equity market, the things that go parabolic. Right? Crypto, you got fart coins that go parabolic, for Christ's sake. Fart coins. You know, if your comment means it ends badly, it always ends badly. It never ends in a beautiful way. All of this. When this is all over, it's going to be shambles all over the place. I promise you. When the music stops, you better have a bunker ready. But when that time shows up, who the hell knows? You know? And what prevents that time from showing up is, you know, you got a government and a Fed rigging the game. You know, this is not the old market, the old ways. You got a president out here buying stocks, touting stocks, pumping the market, telling people to buy the market. Putting in a Fed chairman who's going to cut rates. You know, you got his sons building positions in equities. This is not your normal market here. Trust me, if anyone is dizzy from this shit, it's me. You know, from when I got in this game till now, it's a completely different game. It's a casino. You know, it's a casino. But you gotta, it's a rigged casino. You gotta keep that in mind. They can keep rigging the game. Eventually, they're gonna have to pay the piper. But you keep rigging the game, you can buy yourself a lot of time. I think, listen, and think of Trump's mentality. I think we got a couple more years, and then that last Trump's out year, let me just say, you better have a bunker ready. That's my impression on things. All the casinos are rigged. You're right, Andrew. That's what I'm saying. Yeah, that's what I'm saying. You know, the bears out there, and don't get me wrong, you go through corrections, stocks go down, markets go down. But to be a perma bear is like playing rigged blackjack online, you know? The game's rigged against you. But that's what I think. Again, something Trump is going to change laws to remain in the White House. He'd get a bullet in his head before that ever happened. Trust me. But I think that his last term, the last time, what he wanted to do was, you know, kind of different. And then he got bit by COVID. Here, I think he wants to have a bang before he goes out. You know what I mean? He wants a reputation. Yeah, exactly. Exactly. Like, look, we saw what they did for Biden, and Biden wasn't even alive. He couldn't give a rat's ass about the market. But you saw how they cut rates and greased it so it can look good into that election. You know what I mean? Again, politics aside, both sides I'm talking about. Right? So if they did Biden, they did it. You don't think Trump is going to do it? You heard him. When does the president ever comment like that on the dollar? Comes down and says, dollar. He basically said, dollar could go lower. Who cares? The market will look better. This will look better. China, Asia's been doing it for ages. It's our time to do it. All those old traditions and rules, they got flushed down the toilet a long time ago. Yeah, yo-yo. He said, hey, like that. It's a yo-yo. Goes up, it goes down. Don't worry about it. It's a whole different era here, man. Whole different era. But we got to try to take advantage of it. Personally, I wish there would be more weakness in pullbacks, but I guess every bull says that, right? But again, from what I remember, like back in the day, even the bullish, the climb of the wall of worry, those markets are always the best. The beauty of climbing the wall of worry was the worry caused pullbacks. So if you had a bullish thesis, you could wait for a pullback and buy that because, again, the wall of worry was out there to worry people, right? To worry investors. Here, even with the wall of worry, there are no pullbacks. There are no pullbacks. So hopefully, like some people think that's what's going to change this year because of everything that's going on. You're going to have a little more volatility. That's gonna be a good thing. But like, look like today, right? You get a little bit of selling, bloop, I step right in, and then you got retail stepping in on every dip besides. But until we see something different, I think again, and you just these metals, that I think that's what they're confirming to me. A cyclical breakout. I could be wrong, but I think that's the confirmation what the metals are telling us. You're getting a different market here. You're getting a cyclical breakout. You got to understand, even though the market was bullish all these years, okay, it was a defensive tech-led bull market. You understand? They were buying Mag 7 like they were bonds. They didn't want to buy anything economically sensitive because the Fed was rigging the game the other way to tame inflation. Right? Why would I buy anything tied to the economy when the Fed is tightening because inflation's too high? So you had them buy these big tech names that no matter what, they're going to hold their fundamentals. They're not going to deteriorate. They can find growth. They don't need the economy. So they just piled into all those names. And the indexes were higher, but all these cyclical commodity stocks, all these stocks were in the shit house. If you owned any of these things, even though the indexes were making highs every day, you were getting buried alive. You were getting buried alive. So I think that, again, I know I'm pounding the same song and dance here that we've been talking about since October, but it's kind of how I see it here. What we were talking about in October, right? Possibly happening into this year, we're getting confirmation from the market that it's underway. Small caps outperforming, metals breaking out, cyclicals breaking out. Like the market is giving us confirmation signals to what we were talking about. I mean, it depends. There's so any group, right? So think of industrials, materials, right? XLB. This was sentiment-wise. This was off the April correction, the worst sector in other words, the most bearish sector out there. People were the materials for good reason. You don't want to own any of these stocks. AI, tech. That's all it was all about. But, you got a big breakout in this, big breakout. The industrials, like these are all the cyclical parts of the market. That's a good question. Like a cyclical ETF, I'm sure there is. I don't know of one offhand. Again, like the RSP does better because, again, the cyclical parts of the S&P 500 now are participating. You understand? But I know what you're saying. You're talking about a pure play cyclical ETF. Because even like value stocks should do better. Again, everything that kind of was on the sidelines for the past, since at least 2021, 22. Even the COVID rally, and a lot participate in it because the Fed threw in the kitchen sink. But, if you think about what led that rally, it was cloud, software, stay-at-home names. They still didn't want to buy cyclicals, even with the Fed rigging the game, because there was a global shutdown. What economy? How can you buy economically sensitive stuff if the economy is not even functioning? We should, Andrew. We should. But that's a good point. Probably, because nobody wanted one, Andrew, right? What the hell do they want it? Like, think about all these levered ETFs and names. What are the names that have them? You're not finding a cyclical levered ETF, right? Seriously. Right, a 3 times bull. You see now, like, AMD has a levered ETF. Now they even have. How about this? I saw this the other day. Oklo. There's a levered ETF for Oklo. There's a levered ETF for Oklo already. What the hell's the symbol? I saw it. There was a little sweeper activity in it yesterday. I forgot the symbol. OKXK or something. Let me see. Here it is. OKLL. Staples are considered defensive, but they should do better in this market because they're so hated, But staples are considered defensive. That's why they've been so shorted recently, is because they were betting on a stronger economy. Staples you don't want to own in that backdrop. You understand? Like staples, almost like gold, they hide out in corrections. But the sentiment has been so bearish there because of that, that you had quite the squeeze this week. Crazy. Staples outperforming NASDAQ. Who would have thunk it? Yeah. That's what I mean. Coin, right? Coin levered ETF. There's no cyclical name. You find me a cyclical name. Like Caterpillar don't have a levered ETF. Nobody wants these things. That's the beauty of these names. That was the beauty of the setup in these names. Nobody's in it. Even with all that, it still is a tough pill to swallow with all the AI hype and everything else. like, who wants to own cyclicals? You want to own AI, right? You want to benefit off this AI mania. Even now, finally you start to hear people starting to talk about small caps and cyclicals. Josh Brown is pumping a cyclical name on halftime shows now. That was foreign. Like Josh Brown, he's buying, like, he's telling people to buy Nucor now. You know what I mean? But he's been in the game. He sees what's going on now. Yeah, he's been in the game. So, but again, there'll be pullbacks, corrections along the way. But this is, I think, the camp we want to focus on. Not that the other names can't be played, not that there won't be opportunities and great rallies in AI stocks and other tech names, but like, this is, the egg didn't fully hatch here yet. You know what I mean? Like, it's just getting started. Now, it may not get to a frenzy like all the other stuff, but what if it does? Right? What if it does? Where, metals are. You know what I mean? Like, look, these things, they did, like, Nucor is just getting ready to break out. There's done nothing here. And you're talking about, like, Nucor is like a stud cyclical, right? I think STLD, we saw flowing, has been doing better. Look. So, and the beauty is, if this continues, there are going to be new names. There are going to be new opportunities. Again, you guys don't remember cyclical bull markets, a lot of you guys. But as it gets bullish and unfolds, it ends up, similar to any other bull market. The buying starts to spill over into other things. Cyclical IPOs. God forbid you get a cyclical IPO, right? What is it? God forbid you get a cyclical IPO. You don't get any IPOs these days. PAVE, that's construction, isn't it? I remember this PAVE. Infrastructure. Look at the move on this thing. Goodness gracious. Yeah. Here's the tough part, like, right? There's always risk in all this, but the tough part is being smart about it at the same time, right? Not getting all gassed up and just buying stuff that's been ripping. But, you watch these things move every day, and if you don't chase, they're gone, and you're waiting for pullbacks, they never come. That's what frustrates the living piss out of me. If you see in hindsight, every sector or industry is cyclical. Yeah, I'm using the term cyclical, but I mean it's more economically sensitive. Everything's cyclical, yes, but I'm talking about, like, more economically sensitive. That's what we refer to cyclicals. You got, like, kind of. Well, again, these days it's different because you can't put labels on things, right? There's so many different sectors. Like, what's the tech sector? Is space tech sector? It's a different market. But when I say cyclical, a lot of you guys know what we mean when we say cyclical. We're talking about everything that's been out of favor because it's tied to economic growth. Everything that hasn't participated. Again, Sahil and I have been talking about this for years. As the market was going up a few years ago, I remember crying to Sahil, this is not even a real bull market. Right, Sahil? You remember those conversations? This is not even a real bull market. You got 7 stocks pushing the indexes higher. There's no underbelly names participating. And then finally, AI showed up, and that's when it started to broaden out a little bit. Prior to that, we didn't experience a bull market up until recently, guys. Right, Theo? You remember those discussions. It was a defensive market. It was a risk-off market. Nobody was taking any risk. Yeah, it was nuts. It was the weirdest thing. You know? But think of it now, like, the market's crazy like that. It's trained everybody to look at the same thing, right? Especially newer players in this game. They get focused on the same thing and they ignore all the other shit that's going on, right? Like they see a parabolic move in metals and it looks strange to them. But when they see a parabolic move in Oklo, because it's AI and that's what they're trained to look at, it's okay. The market does that. Tesla, why? Had news? No, earnings. They had earnings, didn't they? Yeah, it looks like up, what was it, up, $10? Oh, maybe SpaceX news, the IPO. Tesla. Oh, here. SpaceX said to consider. What we talked about this, remember? But I think Ronchero was saying that it's not going to be easy for them to do this. Remember, we were talking about this. Must SpaceX had to consider merger with Tesla? Yeah. So that's the bump here. Oh, it's just old news being circulated again? Nothing different? What is it up here? Up 12. Interesting. Should keep a bid in Tesla, though, you would think, right? Yeah, they're pretty much that's what they said, right? Like the cars, they're not even they're trying to get away from that anyhow. Robots. Robots in space. The future, man. God, I can't believe space we're talking about. No. Yeah, crazy. I saw that, Sahil. Crazy. The money that gets thrown around on a day-to-day basis is absurd. You know, the amount of money. Oh my God. Like the Amazon today, just today, it wasn't even like people didn't even talk about it. $1 trillion getting thrown around. Nuts. Absolutely nuts. All right, guys. Anyway, I'm going to wrap it up. Again, game plan, again, we've been talking about it enough. Hasn't changed. If I saw anything to change kind of the playbook of what we want to focus on, obviously I would let you guys know. The risk, again, what I think it's this, and I think it could linger. You know, we get days like today. I think the more we get, like in other words, the more we can get of a sell, we can get some sentiment, short-term sentiment on our side. That would be a good thing. You know, just but days like today where they kind of recoup most losses, you don't really make much dent. They're going to be a pain in the ass. Right. So here's like correlation on a daily. Okay. We rally, we're right back to landmine risk again. Yeah, it's not the end of the world, but you know, you don't know how deep these little flushes can go. All right. So you look towards those flushes as tactical opportunities. But I think we got to try to stay focused as we get through earnings, post earnings, the stuff we're talking about, the groups we're talking about, the pockets that we're talking about, the cyclical parts. You know, we got to look at a name by name, sector by sector basis. I think that's how we're going to have to start doing it, as opposed to kind of the overall market until we get a healthier rinse. All right. But thanks for everybody stopping by, as always. The rest of you have a great weekend. Stay warm. It's freezing out here. Steam Room members, I'll see you mañana. Have a good night, everybody.